In the metals quadrant, taking a look at the gold futures contract, the August contract has been in a little bit of a basing pattern. After breaking 1700 on both Thursday and Friday of last week, gold closed above it both days, incidentally. It then had two small up days since, which is a sign of some temporary basing, although I should be very clear that a basing pattern does not mean a rebound. It just means that the sell-off has been abated for the time being. And when we talk about sell-off, gold is currently working on a small up week. After 2 days of trading, it's only up a little bit less than 0.5%. Prior to that, we were in a pretty substantial weekly downtrend. On the high today, 1716.50 was up almost 0.4%. On the low, 1702.60 held that 1700 level down just short of 1%. And we finished slightly up, but pretty close to unchanged. Now, inverse relationship between metals and the dollar is something we typically look at. That is a historical relationship, although it is not 100%. But the dollar is having its worst session since June 14th today. It's down almost 1% against the euro, 1.3% against the Australian dollar, 0.4% against the sterling, and 0.6% against the Canadian dollar. So very weak dollar, could be a little bit supportive of gold, and maybe why we came off of the floor for the last 2 days for gold. The dollar is actually down the last 3 sessions overall. Now, also seasonality with commodities, seasonal weakness may mean that basing I talked about didn't hold, or doesn't hold, I should say. We're about to enter a pretty significant seasonal down period or weak period for gold, although seasonality, not a trading strategy, just something that commodities traders need to be aware of. And from the end of July going into about the 3rd week of August, pretty weak seasonal tendencies for gold.